Welcome back, guys, to today's lesson. So today we are dealing with a cash budget. As you can see, it's budgeting from November 2016. As you can see, DBE November 2016 paper. So I downloaded these papers on stanmorephysics.com. You can go to my other videos. You will see the link to stanmorephysics.com where I download these question papers, so that you can also be able to check and do it on your own. So don't worry, guys, I will carry you through this budgeting topic. We're only a few weeks left till the trial exam. So we're in August now. The trial exam is coming, so you guys must use all your time in practicing. Dedicate all your time in practicing. No more time to playing. You will play next year. It's only like 3 months left before you finish your matric, so keep on pushing the work. You will thank yourself, guys. Okay, so let's get on the topic. I won't waste any more time. So this topic is for 40 marks, as you can see. 40 marks, and it's 25 minutes. 40 marks, 25 minutes. Simple as that. 40 marks, 25 minutes. Stick to the minutes. Do not wait. Do not waste any time. Stick to the minutes. That's why when you are given the paper, start writing as soon as possible. Don't waste any time, guys. It's 40 marks, 25 minutes. And don't complain when they say time is over, because those people who made this paper, they know that if you did practice very well and if you did prepare yourself, within 25 minutes you will be done with this. So let's get on it. Question number 6.1, they say refer to information G. Refer to information G. As you can see here, they are saying we must refer to information G. Refer to information G. So we will turn the page where there is information G. So the information G that they are talking about, EFG, is right here. So the information G is this one that they are talking about, all this. So we are going to be referring to this information G all over the paper. As you can see, this is our cash budget. There is receipts, and then there is payments. Everything that we receive in cash and everything that we pay in cash. Then the only trick here, we are supposed to just fill in the A, B, and C. That's it. Then we are done with the cash budget. But let's continue. Go back to the question. What do they want us to do on 6.1.1? Remember, guys, we will be using this answer sheet. We will be using this answer sheet. As you see, it has 6.1.1, and the question paper will be this one. So what do they want us to do? They say 6.1.1. What are we supposed to do? Identify 2 items that the bookkeeper recorded incorrectly in the cash budget. 2 items that were recorded incorrectly in the cash budget, meaning they were put there by mistake in the cash budget. That's 6.1.1. Remember, guys, cash budget deals with cash only items. It does not include anything that is not cash. So let's check the 2 items that were recorded incorrectly there. We will turn to our budget on information G. Let's try to check the 2 items. Cash sales is okay. Cash from debtors is okay. Rent income is okay because it's an income. Then there is discount received. Discount received is not cash. When they give us a discount, they are not giving us any cash. They are just discounting us, which means we will buy goods or trading stock at a cheaper price. So the first item is discount received. Discount received. That's the first item that is not cash. Then let's check at any other item on the payments. Creditors, payment to creditors is fine. Directors' fees is fine. Salaries of salesperson is fine. Repayment of loan is fine. Interest on loan is fine. Audit, interest expense, audit fees, delivery expense, bad debts, and depreciation. These are not fine items. Bad debts is not a cash payment. It's just a plan on how much must we prepare for in case for those debtors who will no longer pay us our money. So bad debts as well as depreciation, they are not cash items. So we have already found the non-cash item. Number 1 is discount received. Number 2 is bad debts. Number 3 is depreciation. These are the items that are not part of cash budget. They were included here by mistake. I hope you get that. So let's put them there on our answer book. 6.1.1, identify 2 items recorded incorrectly on the cash budget. They said 2, so we said it's bad debts, it's depreciation. Depreciation is just losing of value of a vehicle. It's not a cash item. It's not even money. After depreciation, we said it's discount received. All these things are not part of the cash budget. So if you write like this, you will get your 2 marks, just like that. Free marks. This is a free mark, guys. I don't expect any of you to get this one wrong. So let's move on to 6.1.2. What are they asking? They say identify 2 items in the cash budget that would not appear in a projected income statement. So what is a projected income statement? Projected income statement. By projected income statement, we mean an income statement that is the same as the income statement that you know. But the difference with this one is small. This one is predicting the future. So you can notice the other income statement we were doing, we were just focusing on this financial year. So a projected income statement focuses on the future. We can prepare an income statement for next year or for next month or whatsoever. It's an income statement that is budgeted, that is projected, is for the future. Do you understand that? So in this question, what they are asking about is 2 items in the cash budget that will not appear in the income statement. In the regular income statement that you know, is the same income statement. Items that will appear in the cash budget. Cash budget, but you will never see them in the income statement. So let's go back to our information G, the cash budget, and look at those items. So let's look at items that you will never ever see in income statement here on our cash budget. This is our extract. So item number 1 that you will never see on the income statement is cash sales. Sales, I think it's there. Cash from debtors. You can never see any item return cash from debtors on your income statement. So this is the first one, cash from debtors. What's the second one? Payment to creditors. You cannot see any item return payment to creditors on your income statement. Cash from debtors and payment to creditors. We will never see this item on our income statement. There is no income statement that has payment to creditors. There is no income statement that has cash from debtors. You get that? So this is the answer for 6.1.2, where they are saying 2 items in the cash budget that will not appear in the projected. So we said it's cash from debtors, cash from debtors. The second one we said it's payment from creditors. You guys will pardon my beautiful handwriting. I'm a doctor. So my handwriting is that of a doctor. Yes, so let's continue, guys. I'm just joking. Let's go to 6.2. The debtors collection schedule. Debtors collection schedule. Back to our cash budget. Can you see this term, cash from debtors? What is this term all about? This term, cash from debtors, this one. What is it all about? This term, cash from debtors, it refers to the money that we are receiving from our debtors. Debtors are the people who owe us money. So when they decide to pay back our money, we call it cash from debtors. Remember, pay back the money. Pay back the money. You are our debtor. So the cash we receive from you, we are going to call it cash from debtors. Why do you become our debtor? It's because we would have sold you goods on credit. When we sell goods to you on credit, obviously you become our debtor. You owe us. So we're expecting to collect that money from you. Hence, there is this question on 6.2 where they are saying debtors collection schedule. What is this? This is the plan on how our debtors are going to pay us money. As you can see, our debtors collection schedule has months here: July, August, September, October. What does this month stand for? It stands for all the credit sales. July, we made credit sales of 120,000. August, we made credit sales of 151,200. September, we made credit sales of 172,800. October, there is nothing, which means we have to calculate the credit sales for October. What are credit sales? Credit sales is when we sell goods on credit. With sithengisa ama-goods ngesikweleti, isikoloto. We sell goods on credit. So when we sell goods on credit, obviously we are supposed to receive that money from our debtors. We are supposed to collect that money from our debtors. Can repeat that again, because obviously this is a video. Repeat again up until you understand what this is all about. Due to time, I will not keep on repeating. So July, for an example, they owed us 120,000. Now this plan, how much are we going to receive on September? On September, we are going to receive 8,400. Then on October, how much are we going to receive? We have to calculate that. Then from the sales of August of 151,200, how much are we going to receive in September? In September, we're going to receive 60,400. October, we are supposed to calculate that. Then we move on. On the sales of September, we made sales of 172,800. How much are we going to receive in September? We're going to receive 86,400. In October, we have to calculate that on our own. Then on the sales, credit sales from October that we have to calculate on our own. How much are we going to receive in September? We have to get that. In October, we have to get that. So that is it, guys. To fill this table, there is specific information for it. Information number C. Information number C, called the debtors collection. The debtors collection. This is the information that you use to fill in the debtors collection schedule. To fill in this box. It's very simple. So this is the information we are going to use to fill that box. So let's start with July. Let's start with July. So on July, we made credit sales of 120,000. Okay, I will use our paper here just to make the calculations. On July, we made sales of 120,000. I will write it down. July, we made sales of 120,000. How are we going to collect this 120,000? How are we going to collect this 120,000 on July? I'm going to calculate it on this paper to show you. Okay, so let's go. They say on July, on the sales from July, these ones, on the sales from July, on our schedule here, on our collection schedule, they are saying 50% is collected in the month of sale. Meaning in the month that we are making the sale, we are going to collect 50% of that debt. Half of it actually, in the month of sale. Meaning if we are selling in July, we are going to collect in July 50%. So let's do that. Let's do that. In July, we made sale of 120,000. I wrote it here. July, we made sales of 120,000 multiplied by, they said in the same month, we are going to collect 50%. So you say 120,000 times 50 over 100. Then is there any discount for early payment? No, there is no discount. So let's put it there. Sorry. So how much are we collecting? Let me punch my calculator. We are going to say 120,000 multiplied by 50 over 100. How much are we going to collect in July? They said it's 60,000 in the month of sale. 60,000 in the month of sale. So the month of sale, remember, it's July. So we're going to collect 60,000 in the month of sale, which is July. we are going to collect 60,000. We are following this schedule. They said 50% is collected in the month of sale. That's how we calculate it. We take the credit sales from July, which is 120,000, then we collect 50%. And so this is what we are going to collect on the month of sale, which is July. So we are going to collect 60,000. Now back to our schedule. On our budgeted period here, periods, do we have July here, which is the month of sale? No, we don't have July. Our period starts from September and October. This tells you that this one will not be recorded anywhere. So we pass the first percentage. So let's go to the second percentage. On the second percentage, they are saying 40. We are still on July. Remember, we have to finish all these percentages for July. So on the second percentage, they say 40% is collected in the month following the month of sale. In the month following the month of sale, we are still in July, remember. So the month of sale is still July. So we are going to collect how many percent? 40% in the following month. What is the following month after July? Is August. So let's calculate that. We are still on July, and then now they are saying on the following month we are going to collect 40%. That's what they said here. We are going to collect 40% in the following month. So we take the same amount for July, the same credit sales for July, 120,000 times 40 over 100. Then we punch our calculator. 120,000 times 40 over 100. 40 over 100. We're going to get 48,000, which means we are going to collect 40%, which is 48,000, in the following month. Following month after July is what? Is August, right? The following month after July is what? Is August. And is August on our budget period? Let's check our budget period on our answer book. Following month is August. There is no August in our budget period. Our period is only September and October, which means this 40% will not be recorded anywhere because it's the following month after July. So we are done with the second percentage. We are still in July, guys. We have to finish all these percentages. We are still in July. We only did this one and this one. Now let's go to the third one, the 7%. They are saying 7% is collected 2 months after the sale. 2 months after the sale. What is 2 months after the sale? Remember, our sale, we are still on July here. Our sale is still July. So we are still on July. What is 2 months after the sale? Our sale is still July. We are going to collect 7%. What is 2 months after July? 2 months after July is July, August, September. So we are going to collect that 7% in September. Let's calculate 120,000 times 7 over 100. We are going to collect how much? 2 months. We are going to collect 120,000 times 7 over 100. So we are going to collect 8,400 in 2 months after the sale. We are going to collect 8,400 2 months after the sale. We are still in July. The sale is still July. Remember, we are still in July on our. We haven't finished the percentage. We are still in July. The sale is still July. So they are saying we are going to collect 7%. Here it is. Here. We are going to collect 7% 2 months after the sale. This is how we calculate it. 120,000 times 7 over 100. We are going to collect 8,400 2 months after the sale. What is 2 months after the sale? Remember, the sale month is July. So we are going to collect 8.4, which is 7%, 2 months after July. What is 2 months after July? Okay, it will be July, August, September. You get that? It will be July, August, September. So this will be 2 months after. July, August, September. July, August, September. That's 2 months after the sale. We're going to collect 8.4 in September. Let's go to our budget period and see if September is there. Is there any September here? Oh, yes, it's there. There it's September. So now we're going to collect that 7% because September is there in our budget period. So we said we're going to collect how much? 8.4 2 months after the sale, which is September. 2 months after the sale is September because our sale is July. So the first month is August, the second month is September. So we're going to collect 8.4 in September. And September is available in our budget period. So here is the 8.4. It was collected in September. All these guys was to show you how this 8.4 was calculated. Simple as that. So let's go check. Is there any other percentage after the 7%? Let's check. We did 50%. We calculated here, which is this one. We did 40%, which is this one. We did 7%, which is this one. The remaining is 3%. So this one, let's just discard it for now because it's for bad debts. I will explain that some other day. That one will only affect whereby if there was a column writing bad debts here, but there is no such column, so it does not affect us for now. So this one, let's just forget about it. So we're going to focus on 3 percentages, which is 50, 40, and 7. The 3%, forget about it. So here we are. For July, we have calculated all the percentages, 50, 40, and 7. And unfortunately, the only percentage that got to work for July is the 7% that gave us 8.4. Go back to the video, you will understand how we got here. Repeat and repeat. Unlike in class where you will be afraid to ask, here you are free to ask. You are free to ask. So we are done. We are done with July. We are done with July. We are done with July. So let's go to our second month, which is August. Our second month is August. So we're going to calculate for August. Going to calculate for August. What are the credit sales for August? On our collection schedule, the August credit sales is 151,200. So let's write it on our answer. Our calculator paper is 151,200. This is our August credit sales. We're in August now. 151,200. So how are we going to collect this credit sales of 151,200 in August? Very simple. We go to our collection schedule. Back to our collection schedule, which is information number C. They are saying 50% is collected in the month of sale. What is the month of sale? We are in August. So the month of sale is August. We are going to collect 50%. So it's 151,200 times 50% on the month of sale. So let's calculate that. 151,200 times 50 over 100. We are going to get an amount of 75,600. That's what we are going to collect in the month of sale. In the month of sale, we are going to collect 75,600. And the month of sale is what here? It's still August. That's the month of sale, of credit sale. So let's go to our budget and see if we have August in our budget, which is the month, which is the month of sale. Let's check if we have August. So this is our budget. This is August. Do we have it here in our budget? No. Here we have September and October. So which means this 50% in the month of sale will not work for August because August is not in our budget. Our budget starts in September and ends in October. So we move on. We leave this 50%. We go to the next percentage. Our schedule says what's the next percentage? The next percentage after 50% is 40%. When do we collect this 40%? They said 40% is collected in the month following the month of sale. What is the month following the month of sale? We're going to collect 40% in the month following the month of sale times 40 over 100. The month following the month of sale, we're going to collect 151,200 times the 40 over 100. So in the month following the month of sale, we're going to collect 60,480. We're going to collect it in the following month. Remember, we are still in August, guys. We are still in August. What is the following month after August? What is the following month after August? The following month after August, obviously, is September. The following month after August is September. So in September, we're going to collect 60,480. So let's go to our budget period and see if we have September, which is the following month after August. Do we have September in our budget? Yes, we have September. This is September in our budget. So how much are we going to collect in September? The following month, we're going to collect 40%, which gives us an amount of 60,480. So let's collect that amount in the following month after August, which is September. So where is our budget? This is September, and we're still in August, guys. We're still in August. So the following month, we're going to collect 40%, which will give us 60,480. This is the same amount we got here, 60,480. That's how they got it. That's how they got it. Hey, sorry for the disturbance. I was charging my phone. Charging the phone. I forgot to charge it because I was still at school. So I did not have time to charge. I'm just right from school now. That's why. But I will charge it. Don't worry. We'll continue. So we're going to collect 60,480 in the following month. And the month of sale is August. The following month after August is September. So we're going to collect 40% in the following month. So the month of sale is August, and we're going to collect the 60,480 in September. And that's how we got it as well. That's how we got it as well, and that's how they got it as well. 60,480, 60,480. So we're done with the second percentage for August. What is the last percentage? The last percentage is 7% is collected in 2 months after the sale. Oh, my laptop also does not help it. Let me charge my laptop. Okay, so the last percentage, 7% is collected 2 months after. What is happening here? Okay, 7% is collected 2 months after the sale. So this is the last percentage for August. So let's go back to our calculation. They are saying 7% is calculated 2 months after the sale. So same amount for August, which is the credit sales for August, which is 151,200. 151,200 times 7 over 100. So let's punch our calculator. It's 151,200 times 7 over 100, which is 7%. So we're going to collect 10,584 when 2 months after the month of sale. We're going to collect this amount 2 months after the month of sale. So what is 2 months after the month of sale? What is 2 months after the month of sale? 2 months after the month of sale, remember the month of sale is August. So 2 months after August is how much? Is which month? It's August, September, October. So we're going to collect this 7% in October. And October, we're going to collect an amount of 10,584. Still in the August. So in October, we are going to collect how much? This amount, 10,584 from the sales of August. From the sales of August. From the sales of August, we are going to collect 10,584. So let's put it in our budget. We're going to collect 10,584 because obviously October is in our budget period. So we're going to collect 10,584 2 months after the month of sale. You get that? Which is October. We're going to collect 10,584 2 months after the month of sale, which is October. From August, 2 months after August is October. And we're going to collect the 7%, which is 10,584. You're going to repeat, guys. We're going to repeat this video. Don't be afraid until you get it, because we are rushing through time. So we're going to collect this amount. Now I think we're done with all the percentages for August. We've done 50, we've done 40, we've done 7. We're done with all the percentages for August. So we're done with August. We're done with August on our collection schedule. So now let's go to our third month, which is September. September. So our third month is September. September, which is the month of sale. So we're going to collect, I mean, we are being owed an amount of 172,800. 172,800. We're being owed this amount in September. So let's make our calculation. When are we going to collect this? We start afresh with our percentages. So let's go to our percentages. Let's go to our percentages. So the first percentage obviously is the first one, the 50%. They're saying 50% is collected in the month of sale. Each and every month, guys, have its percentages. We have to do the 3 percentages for each and every month. Like we did in July, we did in August. Now we are going to do the same for September. The first percentage is 50% is collected in the month of sale. So the month of sale is September. September, they're saying we're going to collect 50%. So we take the credit sales for September, which is 172,800. 172,800 times 50%. So let's punch our calculator. 172,800 times 50 over 100. So we are going to collect this amount in September, which is the month of sale, 86,400. We are going to collect 86,400 in the month of sale. And the month of sale obviously is September. So in September, we are going to collect 86,400. So let's go to our collection schedule. Do we have September in our collection schedule? Yes, we have September, and this is September. So we said we are going to collect how much? 86,400 in the month of sale, which is September. 86,400. Hence, that's where they got this 86,400. Okay? Remember, if you have any question, you can just pump them there on the comments. Don't forget to also subscribe. Subscribe, guys. I will post more videos. Don't forget to subscribe and like the videos so that I can get enthusiasm to make more and more video lessons to help you. And you can also WhatsApp me if you have any other questions. So we are going to collect this amount in the month of sale, which is September. This amount, hence that's how they got it here. So we are done with the first percentage for September. Let's go to the second percentage. We are done with the first percentage for September, which is 50%. So the second percentage for September is 40%. They are saying 40% is collected in the month following the month of sale. So we are in September, that's the month of sale. So they are saying we are going to collect 40% in the month following the month of sale. And the month of sale is September, which means we are going to collect 40% after September. You get that? The month of sale is September, and they are saying we're going to collect 40% after the month of sale. So we're going to say 172,800 times 40%, 40 over 100. 172,800 times 40 over 100. And we're getting an amount of 69,120 in the following month. If the month of sale is September, the following month will be what? Will be August. Oh, sorry. If the month of sale is September, the following month will be October. Sorry for that. So if the month of sale is September, the following month, the 40% of 69,120, the following month will be October. So we are going to collect 69,120 in October. 69,120 in October. So let's collect it. We are going to collect from September sales. We are still in September. From the September sales, we are going to collect, how much was it? 69,120. 69,120 in October, because this October is in our budget period. That's how we got it. 69,120 following month. Following month after September is October. Hence, the 69,120 will be collected in October. 69,120 October, which is the following month after the month of sale of September. So we have done 2 percentages. We have done 50%. We have done 40% for September. Now the last percentage obviously is how much? 7% is collected 2 months after the sale. 7% is collected 2 months after the sale. So it's like this. We take the credit sales for September, 172,800 times 7 over 100. 172,800 times 7 over 100. So we're getting an amount of 120,96. 12,096 will be collected 2 months after the month of sale. So if our month of sale is September, what is 2 months after the month of sale? So it will be September, October, November. That's 2 months. That's 2 months after the month of sale. So 2 months after the month of sale is November. November. So in November, we are going to collect 12,096. Is November available in our budget period? Let's check. So our budget period ends in October, so there is no November. If there was November, we're going to record this amount right here in November. So November is not there, which means we are done with September. We've collected both the 2 months in September. There is no other month here. So we're done with September. We've collected 50% in September, 40% in September, and 7% in September. 50%, 40%, and 7%. Now what's the next month? The next month on our schedule, we're done with September. The next month is October. Remember, in October, we firstly have to get the credit sales for October. There is a gap here, which means we don't have the credit sales for October. The other month, they've given us the credit sales, but October, they never gave us the credit sales. We have to get it on our own. To get that, we have to get the credit sales on our own. Credit sales on our own. We have to look at our information. There is nothing else. Everything that has to do with sales, we look at it. So we want credit sales for October. We want credit sales for October. Don't forget that. We want credit sales for October. There is a gap here on credit sales for October. So we have to look at anything that has to do with sales for October. Anything. On this whole information is yours. You can even start on the other page. that has anything that has to do with sales for October. So the first sales that we see here is this one, and unfortunately this one is for September, so we don't want it. We want any sales for October. So let's go on with our information. This is another sales. This is for August, this is for September, this is for October. There is nothing, so we move on. This information is all yours. There is this other information for sales for October. They are saying sales are expected to increase by 15% in October 2016. I think we can use this one. We can use this one. But is there anything else? Any sales for October? Here is something else. Sales. They gave us cash sales. I think this one will be a bit better. They gave us cash sales. Remember, there are two types of sales. There is credit sales, and cash sales. It's either you are selling ngeskweleti or you are selling for cash. So there are two types of sales. Credit sales. Okay, guys, sorry for that minor disturbance. Let's continue. Okay, so we wanted to get the credit sales for October, which we are not given here on our answer book. So we wanted to get the credit sales for October. So this is what you are supposed to do when you want credit sales, especially for this month of October. You go into your information. This is your information page. You look at anything that has to do with credit sales from the beginning of your page up until that has to do with sales for October. So we have the first sales here, and then this is unfortunately for September. We move on with our information. We continue looking for sales. Okay, move on with our information. Then what about this one? We have sales here again. What is this sales for? They say it is for August, September, then for October is a question mark. So we still don't have sales for October. Then here there is another sales, but they are saying credit sales comprises of 60% of total sales. We will get back to this. We're going to use this one. We're going to use this one in order to get the credit sales for October, because they are saying credit sales are 60%. Still remember my small box here where I said there are two types of sales. There are two types. Then the first one is credit sales, which they said it's 60%. You can go back to the video to see where I was explaining about this. The first type of sales, they are saying the credit sales, it's 60%. If the credit sales is 60%, then the other type of sales, which is cash sales, obviously it is 40%. Then when you combine these two, it will give you 100%. You get it? So 60 is the credit sales that they told us about. So we assume that the cash sales is also 40%. So that's what we want actually. We want the credit sales for for October, which is the 60%. So let's continue and try to get it. Move on to anything that has to do with sales for October. So we have the cash sales here. We have the cash sales for September, it's A. Then for October, the cash sales is 132,480. This one right here, 132,480. So let me use this paper. On October, we are given the cash sales. On October, we are given the cash sales with an amount of this one, which is 132,480. And remember our small box where there is credit sales and cash sales, where they said here, remember I said we will get back to this, where they said here our credit sales are 60% of total sales. So we go to our box and say, okay, if credit sales are 60%, how much are cash sales out of 100? So which means cash sales are 40%. You see it? I hope you get what I'm saying. So credit sales are 60%, cash sales are 40%. Then what are we given here? What are we given here? If you can check our information, return the page. If you can check our information, we are given cash sales for October, which is 132,480. 132,408, which is cash sales for October. So what we are given is the cash sales, which is 132,480. Then to get our credit sales, we are going to use these cash sales. We simply use our formula of what we have divide by its percentage multiply by what we want. So what is it that we have here? We have the cash sales of 132,480. So we're going to write, we have the cash sales of 132,480, which we got right here. Cash sales of 132,480 divide by its percentage. What is this percentage for this cash sales? Go back to your percentage small box here. These cash sales are 40%. Go back to where I constructed this box. You will see how to construct it for yourself. Remember, guys, this chapter of budgeting is all about this box. Once you master this box, you are done with this chapter, because we are then going to use your favorite formula, this one, of what you have divide by its percentage multiply by what you want. You can turn what you have by dividing its value. You can turn it to what you want. This is a life lesson as well. If you have anything, what you have, you can always turn it to what you want in life. This is what this formula is all about. You can turn what you have in life to what you want, no matter how small what you have is. If you work hard and you know how to measure its value, how to measure what the value of what you have, you can always multiply it to what you want. That's the main lesson of this formula. So what we have, divide by its percentage, which means the percentage of what we have, we divide by it, multiply by the percentage of what you want from our box here. So what we have is the cash sales, which we got here from our cash budget of 132,480. So we have the cash sales divide by its percentage. Based on our percentage box, we found out that cash sales is 40%. Then our formula says we're going to multiply by what we want. We want the credit sales as per here. From here, we want what? The credit sales for October. The credit sales for October. That's why we have to fill this gap. So we want what? The credit sales for October. We are going to turn the cash sales from October into credit sales from October. So this is the cash sales from October, which is 132,480 divided by its percentage multiply by what you want. The percentage of our credit sales, which is what we want, is 60%. So we're going to multiply by 60. Then you will get your credit sales. Let's punch it. How much do we get? Let's punch it in our calculator to see how much do we get here. Okay, we have the cash sales of 132. Cash sales of 132,480 divided by its percentage, which is 40%, multiplied by what we want, which is 60% credit sales. So we're going to multiply by credit sales 60. This is all from this box. So our cash sales, we have converted our cash sales to be 198,720. So this is our credit sales, sorry. So we have found out that our credit sales is 198,720. So we have found out our credit sales for October. This is it. This is our credit sales for October. So get yourself used to this formula. We converted our cash sales from October into credit sales for October using our percentage box and our favorite formula. Still remember this formula from income statement. If you don't go back to the video in income statement, this formula works on everything, whether it's income statement whatsoever. Just get yourself used to this. So let's continue. We got our credit sales, which is 198,720. Let's put it here. Our credit sales for October. Well done, we have got it, which is how much? 198,720. So we've filled it there. This is our credit sales for October. We are not done. We are not done. Now we are supposed to find out how much are we going to collect in September, how much are we going to collect in October, because we sold on credit for 198,720. How much are we going to collect in September, how much are we going to collect in October? So we go to our debtors collection schedule. Our collection schedule. We go to our collection schedule. So this is our collection schedule, information number C, right here, number C. This is the collection, debtors collection. So they are saying 50% is collected in the month of sale. So I'm going to calculate it the same way I calculated the other one. So now our month of sale now is October. Our month of sale now is what? Is October. So the credit sales for October is 198,720. The credit sales for October is 198,720. The credit sales is 198,720. And our month of sale is October. So the credit sales is 198,720. So they are saying we're going to collect 50% in the month of sale. So we're going to say multiply by 50%. How much are we going to collect in the month of sale? 198,720 times 198,720 times 50 over 100. So we're going to collect 99,360 in the month of sale. What is the month of sale? The month of sale is October. So on October we're going to collect 50%, which is 99,360. So let's collect it. Is October in our budget period, by the way? Let's check our schedule. No. Yes, October is in our budget period and it's right here. So in October we're going to collect how much? 99,360. 99,360. So the other percentages won't work here because already we are done with October. The credit sales month is October, then the budget period also ends on October. So we are done because the following percentage will say 40% will be collected in the following month. So the following month after October will be November, and our budget period does not have November. So that's why we won't even continue here. So now we are done with our debtors collection schedule. If you did not understand, go back. You have a video. It's all yours to repeat and repeat up until you understand this chapter. Don't forget, you don't give up. If you don't understand it for the first time, you go back and repeat again. You will understand it. So let's calculate the total here, the collections for October. So we're going to say 10,584 plus 69,120, 69,120 plus 99,360 plus 99,360. So we're going to get 179,064. So this is what we are the collection from debtors for October. Then we are going to get your 9 marks, which will be 1, 2, 3, 4, 5, 6, 7, 8, 9. That's your 9 marks, mahala. That's your 9 marks. So this is the collection from debtors for October. How does this total help you? Let's go back to our extract of the cash budget. How does the total help you? This is our cash budget. If you can see our cash budget here, it has this amount. Yeah, this amount. This item here, cash from debtors for September the cash from debtors is 155,240, which means we collected 155,240 from our debtors in September. Let's go and check if it corresponds with that one. Yes, also on the September, the collection, we have collected 155,280, which is the same as here, 155,280. So how about October? How much did we collect in October? In October, there is a question mark, as you can see, which means we wanted the total for October. Where do we get it? Right here on our schedule, the October total collection. We combine all these amounts. Then we got 179,064. That's the October collection. 179,064. So that's the October collection. 179,064. We're done. Go back and repeat if you did not understand. Remember, this is not a class. You can always go back to your video and repeat and repeat and repeat. Now, the next thing that we are supposed to do, let me just fold this paper so that we just focus on what we are doing. Okay, the next thing that we are supposed to do now is simply to complete this 1.3 amount for the cash budget. What is this, Kafeka? When we look at our extract of the cash budget, you can see that our cash budget has A here, has B here, has C here, has D here. We are supposed to complete all this amount starting from A. On the receipt, A is what? Is cash sales. That's A that we are supposed to complete. So let's complete it. So we want what? Cash sales for September. That's what we are supposed to get here. Cash sales for September. Cash sales for September. Remember, you have to look at everything that has to do with sales in order to get your cash sales. You go to your information, you look at everything that has to do with sales in order to get your cash sales for September. So let's go to our information paper. We look at everything that has to do with sales for September. Remember that? So this is our first sales here. This is September 2016, and this is our first sales. This is September 2016, and this is our first sales that we see. How much are they? Budgeted is 288. Then actual is 489. Then we go on and look for any other sales. For September. So information number A, I think this is the most relevant sale, because this one, if you can check, is related to, this one is related to 6.4, but we are still on 6.3. So this cash sales is for doing 6.4. So we are still on 6.3. So these cash sales won't be relevant. Let's go and look at any other cash sales. Here we have another cash sales on our projected income statement. Sales, we have said this is not cash sales actually, this is total sales. We have this total sales August, then September. Then we have the total sales of 288,000 on September. And this is what they want here. They want cash sales for September. What do we have? We have the total sales. So we have to convert the total sales into cash sales. This is what we use. Same thing that we did on our box there. We're supposed to use these credit sales that we are given here, where they are saying credit sales are 60% of total sales. Then we just draw our box. Credit sales are 60% of total sales. We draw your box. You say, okay, they say credit sales is how much? Credit sales is how much? Is 60%. Then cash sales is how much? Is 40%. Which means the total sales, both combining the cash and the credit, will be 100%. I hope you get this. If credit is 60, obviously, cash is what? Is 40, because there are only two types of sale. So if the information tells you that credit sales is 60% of total sales, this means that cash sales is 40%. Now, when you say 60 plus 40, you will get the total sales of 100%. Then once you have your percentage box, you are going to use your favorite formula. What you have, divide by its percentage, multiply by what you want. Okay, so let's get back to our information. What is it that we have here on September? We have sales on September. We have sales of 288,000. Remember, they did not specify whether this is cash sales or is total sales or is credit sales. So we don't know whether it's credit sales or is cash sales or is total sales. But we know that it's total sales, assuming it's total sales, because they did not say it's credit or cash. If they did not specify that it's credit or cash, we know that it's total sales. They have mixed both credit and cash, because again, this is from the income statement. The income statement combines all type of sales. It combines both credit sales and cash sales. Remember that the income statement combine both credit sales and cash sales. So this makes us assume that this is total sales. This is total sales, the one from income statement. So the one from income statement is total sales for September. And how much is it? It's 288,000. So for September, we have total sales of 288,000. Then the formula says divide by its percentage. So what we have is total sales of 288,000 divide by its percentage. What is the percentage for total sales? Always total sales will be 100% as per our box here. Total sales will be 100%. So we're going to divide by 100. Oh, going to divide by 100. Multiply by what we want. What do we want, Kambi? What does our question want on number A? Number A, they want cash sales for September. So we're going to use our total sales, divide by its percentage, multiply by what we want. What we want is cash sales. And cash sales, they say is 60%. So we're going to multiply by 60. Oh, sorry. Cash sales is 40%. So we're going to multiply by 40 because we want cash sales. If we wanted credit sales, we're going to multiply by 60. We're going to multiply by 60 if we wanted credit sales. But we want cash sales. So cash sales is 40%. So we're going to multiply by 40. Go and repeat again how I arrived to this percentage box. You will get it. So now let's punch our calculator and find out how much is our cash sales for September. Going to take the total sales that were given on our projected income statement. Total sales from our income statement is 288,000. Divide by its percentage. So the total sales is complete 100%. As per our box here, total sales is 100%. Multiply by what we want, which is cash sales of 40%. We're going to multiply by 40. So we're going to get our cash sales as 115,200. That's our cash sales. Cash sales of 115,200. And we're going to put it on our cash budget. So this is the cash sales. This is the cash sales for September. It's 115,200. This is how we got it. You must show workings. Don't forget to get all the marks. You must show your workings. We said what we have, which is the cash sales from projected income statement. Sorry, is the total sales from projected income statement, which is 288,000 divided by its percentage. So the total sales, it combined both credit and cash. So it gives us its percentage is 100. Multiply by what you want, which is your cash sales. Cash sales is how much? 40%. So that's why we multiply by 40%. And when you punch your calculator, you are going to get this. That's your marks. So we are done with number A. Let's go to number B. Payments to creditors for October. We want number B now. Payments to creditors for October. So on our cash budget, where is number B? Number B is right here. Payments to creditors for October. So for this payment to creditors, it's always the same thing. You look for any adjustment that says that says creditors are paid in what month. Creditors are paid in 2 months after the purchase. Creditors are paid in 1 month after the purchase, whatsoever. You look for that type of information. Don't forget that. For payment to creditors, you always look for that. Most learners, they struggle on this one. So let's go. Look for payment to creditors, where they are saying creditors are paid in whatsoever. So we're going to look at our information. It's not here. It's not here. We turn to the next page. Creditors are paid in what. Where is it? Okay, it's information number D on purchases. Purchases. Remember, the other name for purchases is cost of sales. The other name for purchases is cost of sales. So here, this information right here, they are saying creditors are paid 2 months after the purchase, subject to a 4% discount, which means we pay our creditors 2 months after we've purchased from them. Remember, creditors are the people we owe money. So if we owe them money, we are supposed to pay them. Ne? So they are saying we are paying them 2 months after the purchase, subjected to 4% discount, which means they give us a 4% discount if we pay after 2 months. All right. So for an example, let's say we purchased in October. If we purchased on credit on October, when are we going to pay? If we purchased on credit on October, we are going to pay 2 months after that. That's what this information says. Paid 2 months after purchase. If in October we purchased, we are going to pay in, what is 2 months after October? Is November, December. We are going to pay in December. You see? So here, for which month do they want? They want payment to creditors for which month? They want payment to creditors for October, which means we want the payment for October that we are going to pay to our creditors. So which month will we have purchased this stock if we are going to pay this in October? Remember, you have to go 2 months backwards, because they said creditors are paid 2 months after. So if they are paid 2 months after, you go 2 months backwards from this month. If they said creditors are paid 3 months after, you're going to go 3 months backwards. If they are saying creditors are paid 1 month after, it means you are going to go 1 month backwards. But here, this important information here, it says creditors are paid 2 months. It won't be always 2 months. Sometimes it will be 4 months, sometimes 3 months, sometimes 1 month. So here they say 2 months. Do you get that carefully? They say 2 months, which means from the payment month, we're going backwards by 2 months. So if we are paying in October, which means we purchased 2 months before. What is 2 months before October? It is August. So which means we purchased in August. We purchased in August. If we purchased in August, we are going to pay in October. Remember, we purchased on credit in August. Sishave sitsenge ngesikweleti. We purchased on credit on August. So if we purchased on credit in August, we are going to pay in October. That's what this information says. 2 months. So August, September, October. So which means we want August purchases here. We want August credit purchases. We want August credit purchases. How much did we purchase on credit in August? That's what we want. So remember, the other name for purchases is cost of sales. Don't forget that. It's very important. The other name for purchases is cost of sales. So we want for August credit purchases or August cost of sales. If they gave you cost of sales for August, that's fine. It's the same thing as purchases. If they gave you purchases for August, you are lucky, but they don't usually do that. They will say cost of sales for August. Then your mind needs to remember that cost of sales is the same as purchases for August. So this is very important. Cost of sales is purchases for August. So what happens if they did not give you the cost of sales for August and they did not give you the purchases for August? What do you do now? The thing that you want, they did not give you. So you are going to use the sales that they will give you. It's either they will give you purchases for August, cost of sales for August, or sales for August. Three things. They are going to give you three things. Sales for August, cost of sales for August, and the other name for cost of sales is purchases for August. So these are the three things we are looking for. One of them you must be given. If they gave you sales for August, the thing for you is simply to convert them. You have to convert these sales into cost of sales for August. That's what you have to do if they gave you sales. So let's go and check what we are given in August. Remember, we want credit purchases on August, or we want purchases on August. So let's go to our information and look for August. So our information, this is August on our income statement. We want cost of sales for August. Remember that. For payment to creditors, we want cost of sales for August. So do we have any cost of sales for August? Let's check. Yes, this is cost of sales for August, but unfortunately, it's a question mark. You see? How about purchases? I don't think we also have purchases. If we don't have cost of sales, and cost of sales is the other name for purchases. If we don't have cost of sales, it means we don't have purchases. If we don't have purchases, it means sometimes we have cost of sales, which means they've written the purchases with the other name, aka cost of sales. But now we don't have cost of sales, which means we don't have purchases. So what are we going to use? We are going to use sales for August. That's the only thing we're left with. Do we have sales for August? Yes, we do have sales for August, an amount of 252,000. That's it. That's the sales for August. 252,000. That's the sales for August. We do have the sales for August, an amount of 252,000. That's the sales for August, an amount of 252,000. Simple as that. So we're going to convert these sales into cost of sales. Remember, cost of sales is the other name for purchases, and we want purchases. So we're going to convert, remember sales, you convert them into cost of sales. So we're going to convert these sales into cost of sales. You know from income statement how to convert sales to cost of sales. Go and revise income statement video. You will see how to convert sales into cost of sales. You use your percentage box where you are given cost of sales, which is always 100%. Always. Whether you go to Namibia, Botswana, wherever, or to heaven, cost of sales is always 100%. Then markup they will give you. Let's check our markup. They are saying the markup right here on information B. They are saying the markup on cost is 80% on sale, on cost, sorry. So markup, they are saying, is 80%. Then our sales is going to be how many percent? Cost plus markup. Our sales is going to be 180. That will be our sales. Now we're going to use what we have to get what we want. Remember, what we have is the sales for August of 282,000. The formula, what we have, remember, it works everywhere. Divide by its percentage, multiply by what we want. It works everywhere, guys. So what we have is the sales for August of 252,000. Divide by its percentage. Based on our percentage box, how many percent is sales? Sales is 180. So this is the percent of sales. We divide by its percentage. The percent of this sales is 180. Divide by 180. Multiply by what you want. What you want is your cost. Cost is always 100%. That's why you multiply by 100 to get what you want, which is your cost. So let's punch our calculator. 252,000 divided by 180 times 100. We're going to get our cost of sales, which is 140,000. That's our cost of sales, also known as total purchases. That's it. That's how we get our cost of sales of 140,000. The other name for cost of sales is total purchases. So now you have purchases for August. You have used your magic formula and your percentage box to convert your sales from August into cost of sales, which is what? Total purchases. Cost of sales is the same as total purchases. Let's go back. What did our question want? Our question wanted payment to creditors for October. Go back to this. I know it's a long thing, but we want our payment to creditors for October. And in order to get that, we wanted our August credit purchases. Watch this, repeat this again to get what and how did I get here. What I did and how did I get here. So we want August credit purchases, and our formula gave us what? The total purchases, which is 140,000. So our formula gave us the total purchases. So we're going to take our total purchases of 140,000. We're going to turn it into August credit purchases. Remember, we purchased on August. We're going to pay in October, which is 2 months. Creditors are paid 2 months after. So now we're going to take our total purchases and turn them into credit purchases. We have to check our information. We have to check this information which says credit purchases are what percent. Total purchases are what percent. We have to check that information that talks about the percentage of purchases. Let's go to our information. Where is it that talks about purchases? It's not here. Let's turn the other page that talks about purchases. Okay, here is the one. It's number 3. Remember, the other name for purchases is cost of sales. So they are said all purchases of stock are on credit, which means these total purchases that we got here of 140,000, these total purchases of 140,000 is actually credit purchases, because they said all purchases of stock are on credit. Usually they say 50% of the stock are on credit. We're going to take this amount and multiply by 50 over 100. But now they did not say that. They said all purchases are on credit, which means we purchased this on credit. So we're going to pay it in 2 months, where they said creditors are paid 2 months after the purchase. We are going to pay it in 2 months, which is what is 2 months after August is October. Hence, that's what we want here. Payments to creditors for October. So August credit purchases, we found that goods is how much? 140,000. We're going to say 140,000. Remember, there is a discount, guys. They said they are subjected to a 4% discount. To calculate a discount, you simply say the credit purchase it. If it's 4%, you say 100 minus 4. Then you'll be left with 96 over 100, which will then look like this. 140,000 times 96 over 100, which will give us 134,400. You are done, guys. That's how you get the August credit purchases. Go back and repeat and repeat and repeat, because this chapter confuses a lot of learners. Not this chapter, this part of payment to creditors. Repeat it again and again and practice questions. You see? Yeah. So that's it, guys. Then now we are going to move to directors fees for October. Directors fees for October. So we're going to continue there. Okay, guys, payment to creditors. Sorry, we are done with payment to creditors. So I meant to say directors fees. Directors fees. Let's continue on directors fees for October. This one's pretty much simple. We just go to our information and look at any info that is talking about directors fees. So it's not on this page. We turn on the other one. It's information number E. Number E, where they are talking about directors fees. This one is like an adjustment from income statement. Very easy. So they are saying the business had 3 directors earning the same monthly fee. Okay, that's the first piece of information that we have, that our business had 3 directors that are earning the same monthly fee. So we are going to say, okay, fine. How do we analyze this piece of information? Our business had 3 directors. They earn the same fee, which means if they earn rand, all the 3 of them, they will earn rand, then the total will be 9 rand. That's what they mean. 3 directors. Then it continues on 30 September 2016. 30 September, which means it's the end of September. On 30 September 2016, one of the directors resigned. To resign is whereby one director leaves the job. So let's put that information. 30 September, which means it's from 1 October, which means it's from October. So from October, one director resigned. Since he left on 30 September, which means it will affect from 1 October. So on 1 October, we are left with 2 directors. That's what the information says. The company has 3 directors who earn the same fee. Then on 30 September, one director resigned, which means on 1 October onwards, we are left with 2 directors. On 1 October, we are left with only 2 directors. That's what the information says. Let's repeat it again. The company has 3 directors earning the same monthly fee. Okay, 3 directors. On 30 September, one of the directors resigned. 30 September, which means it's 1 October, one director resigned, which means from 1 October, we are left with 2 directors. It's very simple. Very, very, very simple. So before we go to the last one, where they say the remaining directors will receive an increase of 35% in their monthly fee from 1 October. It means that the two that are left in October, they will receive an increase of 35% in their payment or salary or their fees, which means it will grow by 35%. So first of all, let's find out how each director earn, how much each director earn before we can increase by 35%. Let's go to our information, director's fees on our cash budget. How much each director earns. Where is director's fees? Okay, here it is. This is our director's fees. This is our director's fees. Okay, so on this director's fees of ours, where is it? Yo, I'm getting old, my eyes can't see, but it's fine. So on this director's fees of ours, on September, remember there were 3 directors from 1 September up until 30 September. There were 3 directors. Then the 3 directors earned an amount of 216,000. Then in October, we want to find out how much the 2 directors that are left, how much are they going to earn in October. In September, there were 3 directors. Who earned the same monthly fee totaling to 216,000. So the first step here is finding out how much one director will earn. Very simple. 3 directors were earning how much? 216,000. So let me write it down. 3 directors were earning 216,000. We want to find out one director. If we want to find out one director, we are supposed to divide by 3. Then we are going to find out how much one director earns. How much does one director earns? So we are going to say 216,000 divide by 3. Okay? Divide by 3. So how much does one director earn? One director will earn 72,000. One director will earn 72,000. Remember, we want director's fees for October, whereby we are left with 2 directors. One resigned on 30 September, which means from 1 October we are left with 2 directors. And we want director's fees for October, where there are only 2 directors. So if one director earns 72,000, how much will 2 of them earn? If one earns 72,000, how much will they earn when they are 2? So we multiply by 2. 72,000 each. 72,000, one direct. How about 2 of them? 2 of them will earn an amount of 144,000. 2 of them. When 2 directors are left, they will earn an amount of 144,000, which means on October they will be earning 144,000. But remember, our adjustment continues here, especially the last part here. Where they say the remaining directors will receive an increase of 35% in their fee from 1 October. So if 2 are left in October, and they will receive an increase of 35%, which means we are supposed to grow their salary by 35%. It will grow from being 100% to being 135%, which means their salary or their fee will grow into 135%. So if 2 of them are earning 144, then in October we grow it by 35%, which means it will now be equals to 135 over 100. This is the straightforward answer. 100 plus 35, because this was 100%, right? Now we grow it by 35%, which means it will be 135. Same as what you have, which is the full director's fees for 2 of them. Divide by its percentage. It was 100% before it was increased. That's why we divided by 100%. Times what we want. That's why we multiply by 135, because we want to find out the increase after they have increased by 135%. So let's increase 144,000 times 135 over 100, which means this director's fees will increase into 194,400. This director's fees will increase into 194,400 from October. So let's put it there where it belongs. 194,400 in October. So let's also put it in our answer sheet. Director's fees for October will be 194,400. These are the workings. These are the workings. You simply said, okay, the directors, when they were 3, they earned 216,000. Then you divide it by 3 to get how much each director earns. And then we found out that each director earns 72,000. Each director earns 72,000. Then on October, we are left with 2 directors. 72,000 each multiplied by 2. We find out that the 2 of them will earn 144,000. Then if the 2 of them earn 144,000, they said their director's fees will increase by 35%. So we multiply by 135 over 100, which means their director's fees will now for October be 194,400. Nazo-ke. Yisho, nazo-ke ngiko lokho. That's it. So now we are left with one thing on our cash budget: interest on loan for October, which is right here. Here I will try to explain briefly interest on loan. Just think about compound interest, simple interest, how you calculate them. Interest on loan, they given us interest on loan for September, which was 68,875. But for October, we have to find out. But remember, when we calculate interest, we calculate them from a principal amount. That's what you learned in maths or maths literacy. We calculate from principal amount. So we have to get the principal amount, then multiply by the interest rate over 100. Here, what did they give us? When we check our information about loan, which is number F right here, the only thing they gave us was that the loan was reduced by 52,800 on 30 September, which means from 1 October, because it was reduced on 30 September. From 1 October, with effect from 1 October, this loan was paid. Reduced, it means it was paid by 52,800. So we paid this loan by 52,800 on October. But how much is the principal, so that we can be able to calculate the interest? We don't know the principal. What we know is that the interest is at 12.5% per annum. You see, that's the only thing we know, that the interest is 12.5% per annum. So where do we get the principal? We only know that interest is 12.5. And we also know that the interest on loan for September is 6875, which means we know the interest, which is equals to 6875. This one, 6875. That's the interest for September. Now, where is the principal amount? We don't know, but we also know that the interest is 12.5%. That's what they told us, 12.5% interest per annum. So we are going to use our favorite formula. What we have, divide by its percentage, multiply by what we want. You draw your small box in order to use this formula. Your small box, your percentage box. So on our box, we know that interest is how much? Is 12.5%, right? And then we know that the principal amount, which means the amount that we borrowed, is always 100%, is the full amount that we borrowed. But the interest, they told us that the interest is 12.5% per annum. But the amount that we borrow, we know that is 100%. So we don't know the amount, but we only know what? The interest. So what do? We take the interest for September, the interest on loan. We convert it into the principal amount using our favorite formula. What we have, divide by its percentage times what we want. So what we have is the interest on September, which is 6,875. Let's write it down. What we have is 6,875, which means is the interest on loan. Divide by its percentage. Remember, they said the interest on loan is 12.5%. So we divide by the percent layo. Its percentage 12.5. Multiply by what you want. What you want is the principal amount that you borrow. Why do we want the principal amount? We want the principal amount because we want to find out how much interest will we pay in October. And to get that, we have to take the principal amount, multiply by the percentage interest rate. But we don't know the principal amount, but we're going to use our favorite formula to use what we have in order to get what we want. This is the most important formula in life and in accounting or in maths. So what we have is the interest rate divided by its percentage, 12.5. Then we're going to multiply by what we want. We want the principal amount, which is 100%. We're going to multiply by 100. Why 100? Because the principal is the full amount. It's always 100. So let's get the principal. What we have is interest rate of 6,875. Divide by its percentage. I want this to be visible. Divide by, we have interest rate of 6,875. Divide by its percentage, which is 12.5. Multiply by what we want, which is the principal. As per our box, the principal is 100%. So we're going to get that the principal amount is 55,000. This is per month, guys. Don't forget. The 55,000 is per month. Why? Because we have derived it from the month of September. So in order to get the full principal amount, let's multiply it by 12 in order to get the 12 months or the full. This one is per month because we have derived it from only the September interest of 6,875, which is monthly interest. This is monthly interest. So to get the full principal amount, we multiply by 12. When we multiply by 12, we are going to get 660,000. That was the principal amount in September. That was the principal amount in September. Remember, I said you can use the principal amount to calculate the interest rate for September. And this is the formula that I gave you. I said you take the principal amount, multiply by the interest rate over 100. So how much is the principal amount? It's 660,000 times 12.5. Sorry, 12.5. This is the full principal amount, remember. Times 12.5 over 100. We're going to get interest rate of 82,400. Remember, this is the full principal amount because we multiply by 12. So the interest rate will be also per year. Since we want only for September, we divide by 12. It gives us an amount of 6,875, which is the same amount as this one. So you see, we have used the interest rate to derive what? To derive the principal amount. Now we are using the principal amount to go back to the interest rate, which is 6,875. Now we know the principal amount was 660,000 in September. We are continuing now. The interest rate, the principal amount in September was equal to 660,000. So it's 660,000. Then our adjustment for loan continues and says the loan was paid by 52,800 on 30 September, which means if we want the principal amount for October, we have to minus the reduction that was paid on 30 September. 30 September, they paid how much? 52,800. Then how much is the principal amount after the payment? It's 660,000 minus 52,800. So we are left with a principal amount of 607,200. That's the principal amount, which means during the opening of October, we are left with a principal amount of 607,200. Now, let's use this principal amount to calculate the interest for October. Remember, this is what our budget wants. It wants what? The interest on loan for October. So we're going to use the principal amount for October after we've paid the reduction. After we've paid the loan, we're left with a debt of 607,200. So we're going to say 607,200 multiplied by the interest rate of 12.5 over 100. Because we want for 1 month, we can multiply by 1 out of 12. 607,200 times 12.5 over 100 times 1 out of 12. Why 1? Because we want interest only for October. So the interest for October, as you can see, the calculator will be 6,325. This is the interest rate for October. You see? This is the interest rate for October. This is the one we put on our budget. Interest rate for October is 6,325. So on our budget, interest on loan for October will be 6,325. And that's the same one we put here on our answer sheet. Where's our answer sheet? This is our answer sheet. The interest rate for October is 6,325. How did we get it? We said, okay, the principal amount from September was 660,000 minus the reduction of 52,800, because they said the loan was reduced by 52,800. Then the principal amount was now left with how much? 607,200 on October. So we use this principal amount to get the interest. Then the interest rate is 12.5 over 100. When you punch your calculator, you are going to get this amount. And that's how we do interest rate for October. That's how we do interest rate for October. Now, if you want to go back and get the principal amount using this interest rate, you can say 6,325 divided by 12.5. Interest rate divided by its percentage times what you want. Principal amount is always 100. So you're going to get 50,600. This is the monthly principal amount because we derived it from the monthly interest rate. If you want the final principal amount, you then multiply by 12. You are going to get 602,200, which is this 607,200, same as this one on my calculator. That's the principal amount. And then now we are done with everything. If you did this, you are going to get your full 18 marks. So the only key here, guys, is to practice and practice and practice and practice. Go and download this paper. Remember, I download these papers from Stanmore. www.stanmorephysics.com www.stanmorephysics.com. Go and download this paper. It's from DBE November 2016 and practice it. Go back to the video if you want to see any clarity or whatsoever. See, things will be easy for you. You will pass with flying colors. This chapter is full of marks, guys. This chapter is full of marks. All these marks must be yours. You can see this chapter is consisting of 40 marks on its own. So if you can master everything that I said here, I'm telling you, you will be a flying star. Don't forget, you can WhatsApp me if you want to ask any questions. Don't forget to also support the channel, guys. Subscribe there by the videos, share with your friends, subscribe and like, so that it can grow and help many more South Africans or any accounting learner there. Now, let's go to the theory part. I will just explain, I won't write. They say the directors changed the method of payment to the salesperson. Explain how this has benefited the salesperson. Quote figures. So they changed the payment method. 6.4. This is it, 6.4. The director's payment method. So salary salesperson, you can see on budgeted, we're budgeting to pay them 40,000. Then on actual, we actually paid them 12,000, which means their salary decreased. How did they benefit? We don't know. Let's continue. Then there is this commission for salesperson. What is a commission for salesperson? A commission is whereby we say, if a salesperson sells one thing, we're going to pay him 2 rand. If he sells 2 things, we're going to pay it times 2. If he sells 100 things, we're going to pay him more. If he sells 1,000 things, we're going to pay him more. If he sells 1 million things, we're going to pay him more. If he sells 0, we're going to pay him 0. That's what a commission is all about. But a salary is always stable, which means if it's always stable, whether you sell, whether you don't sell, you will get it. But a commission is stable. Let's see how this commission benefited him. So we budgeted 0 commission for him. But actually, which means he sold more, then he got 66,150 commission. You see, if we were only focusing on salary, he was going only to get 12,000. But now, because we also introduced another payment method, which is commission, now he got 66,000. Hence, our salesperson has benefited. This is how our salesperson has benefited by changing the payment method. Number 5.4.2, quickly. They're saying directors are not concerned about overspending on packing material. Why? You must quote figures. Let's check packing material. As you can see, packing material, we're budgeting 14,000, but actually we spent 17,800, which is a bad thing. We must only stick to our budget. We must not overspend. But they're saying the directors are not concerned about this. Why? It's because when you look at the sales have improved to 489,600. If the sales has improved, it means we will also improve our packaging. If you sell a lot of cell phones, you have to also pack them in a lot of boxes. Hence, that's why the directors are not concerned about overspending on this. Thank you, guys. Bye. Enjoy your day. That's the end of our lesson for budgeting. I will continue making more lessons. You can request your own lesson if you like. Don't forget to click there, subscribe, click there, like, share with your friends. Bye.